Imagine waking up to the news that gold, the ultimate safe haven asset, is heading for a weekly loss. A stark reminder that even the most trusted investments can be vulnerable to the winds of the economy. But here's where it gets interesting. This downturn is largely attributed to a surprising surge in U.S. inflation, which has left traders scrambling to reassess their bets on the Federal Reserve's next move. As the latest report reveals, U.S. wholesale inflation has accelerated at its fastest pace in 3 years, leaving gold trading near $3,340 an ounce, down 0.6% from its previous session. So, what's behind this sudden shift? The answer lies in the complex interplay between inflation, interest rates, and the value of the dollar. When inflation rises, as it has in this case, the Federal Reserve is less likely to cut interest rates, which in turn strengthens the dollar and makes gold, a non-interest-bearing asset, less appealing to investors. And this is the part most people miss. The fact that gold is priced in dollars means that a stronger dollar can actually weigh on gold prices, even if the metal itself is still a highly valued commodity. But here's the controversy. Some argue that the Federal Reserve's decision to cut or not cut interest rates is not the only factor at play, and that other economic indicators, such as employment rates or GDP growth, should also be taken into account. So, the question remains, will the surge in U.S. inflation be a temporary blip or a sign of a larger economic trend? And how will this impact the value of gold in the long run? We'd love to hear your thoughts. Do you think the Federal Reserve will prioritize inflation control over economic growth? And what does this mean for your investment strategy?